I want to do is talk a little bit more about that credit reduction from chapter 5. So I'm going to see if I can't find a homework problem that we can take a look at. We'll kind of review some of the details there. If anybody knows of one off the top of your head that I can use as an example. I don't know, but were there homework problems on the credit reduction? This may be one of the problems. Because I'm sure you guys are all almost done with the homework, right? Okay, well, I'm not going to spend more time looking for one. Recall with the credit reduction, there are a couple of ways. So the tax rate for FUTA is 6%, right? Our normal tax rate full tax rate that 6% tax rate though can be reduced with the credit reduction. But there are certain circumstances under which that credit reduction, it's assumed that everybody's going to get the credit reduction of 5.4%, the full credit reduction. Which brings us down to, which is 5.4%, which brings us down to a tax rate of 0.6%, right? So 0.6%. Now, there are a couple circumstances under which recall that the employer may not receive that full amount of the credit reduction, right? Does anybody remember what those circumstances are?
Not filing in time or paying on time.
Not paying your FUTA taxes on time, your state unemployment taxes on time, which is kind of weird, right? Because we're talking about federal unemployment tax. Why does the federal government care if you made your state unemployment taxes on time? You recall, they care because if the state does not have the funds to pay those benefits, then the federal government has to step in and make up the difference. So it's in the federal government's best interest to have employers pay their state unemployment taxes on time and in full, right? So that's one. So reasons for it's kind of, like I said, reduced credit, well, full credit, actually I should say full credit, sorry. The full credit, reasons for credit reduction. One was not paying, and this is the employer not paying FUTA taxes on time. And there was another reason why employers may not get that full 5.4%. Do you recall what the other reason was? So the other reason is on a statewide level. If the state has borrowed money from the federal government and they have not, and they are late in making repayments, right? So if the state is in arrears, in order to pay those unemployment benefits. So those are called credit reduction states. So all employers would be subject to a reduction in this credit if they are in a state that is in arrears with the federal government. Right, so those two reasons. So that means, again, that this credit, the 5.4%, gets reduced. So instead of having a 0.6 tax rate, that tax rate would go up. So this is the lowest that this FUTA tax rate could be, but it could go up if the employer is subject to a reduction of that credit. Okay? Questions about that? Does that make sense? Going once, going twice. All right, so if I ask you a question on a test about the credit reduction or doing some sort of calculation, you'd be able to do it. You'd be able to explain what that credit reduction is. Okay. Nobody's saying anything, so I'll assume you're all experts. Again, this one, I want to reiterate it because it is a point that a lot of students get confused, because we normally think of the word credit and reduction as, oh, it's reducing my taxes, but that's not the case. If there's a credit reduction, it's actually going to increase the tax rate. Yeah, Carson.
So is the second option there when the state pays into the fund, or when they're getting it, like,
When they have, so when the state has borrowed from the federal government, from the, when they have dipped into the funds from the federal government and they haven't repaid it.
Okay.
Is that?
Yeah.
And then, so the federal government then penalizes everybody in the state and tries to make up for that difference by increasing that tax rate, that FUTA tax rate. I think on the, pull up the slides here real quick, which I'm gonna need to pull up anyway. So if the contribution is not made on a timely basis, also, oh, that's not what I want to look at. Here we go. So if the state contributions are not made on a timely basis by the employer, also the employer, if they are located in a state that defaults, and this is what I'm talking about here with these payments to the federal government. It's called a Title, 12 advance. So the state has taken some sort of advance from the federal government in order to pay their unemployment benefits. Okay, so when they default on that, they haven't paid it back in time, that's when they'll step in and they will increase then that tax rate. Does that answer your question, Carson?
Yeah.
Okay. All right. All right. Any other questions on chapter 5? FUTA tax. Who pays the FUTA tax? Employer, employee, who pays FUTA tax? Employer, right. Only the employer pays FUTA tax. What about SUTA tax? employer does, there are times when the employee will also contribute depending upon which state they're located in, right? So FUTA tax is always only paid by the employer. It's always a tax that's only imposed on the employer's end, although I think, like I mentioned earlier, it may mean that there's some sort of reduction in the amount of hourly pay that an employee is getting because they're paying these taxes. Every additional fee that an employer has to pay has got to come from somewhere, and so oftentimes what that does is it affects the wage rate of employees. But yeah, the SUTA tax, for the most part, yes, the employer always pays SUTA tax, but there are certain circumstances, depending upon the state, where an employee may make a partial contribution to that as well. And that's on that list in the textbook. Okay. All right. Are we ready to move on? Have we had enough of FUTA tax? Let's take a look at the next chapter.